Thank you so much for making some time in your busy schedules to join us today. My name is Matthew Wan, and I'm the manager of the Program and Funding Administration team. I hope everybody is having a great start to your week. Just before we get into the teleconference, as we approach the end of this year, on behalf of everyone in the region, wanted to take a moment to just pause and share our appreciation for the partnership and the engagement this year. It has proven to be a very eventful year with the introduction of the ministry's cost-based funding model, and we really do appreciate each of you, of the wonderful programs that you run, and the ongoing collaboration that we've had, which I'm sure will continue into 2026 as well. For today, we have an ample agenda, and so I'll get started by introducing Mary Lee, who is an advisor in my team, and she's going to start us off with some housekeeping items, as well as our first agenda items today. Over to you, Mary.
Thanks, Matthew. Hi, everybody. Like Matthew said, my name's Mary. In terms of housekeeping, so as usual, as you heard, the session today is being recorded. Once the recording is available, we'll share the link and the slide materials for your reference. I'd also like to ask if you can please keep your microphones muted and your cameras off during the teleconference. And we will have time for questions as we go through the slides. You can type your questions either in the Q&A feature as we present, or when we get to the Q&A segment part of our session, you can raise your virtual hand and Sonia will call upon you and you can unmute and ask your question. And of course, if for whatever reason we can't address your question on the call today, then you can please reach out to your early year specialist or send us an email to our ZZG. So slide 3 just gives a quick overview on the Q&A feature. So you'll see, thanks. So your screen, you can see on the top left, there's a Q&A icon. So if you click on this, you'll see the Q&A panel open up on the right. And then from there, you can type in your question by typing in the Ask a Question box and clicking Ask. And then you'll see your question gets posted. And then you'll also be able to view other people's questions. And so if it's something that resonates with you or you'd also like an answer to that, or it's also your question, you can upvote it. And so that'll prioritize the questions for us. If you're joining by phone or again, like to ask your question verbally, you can use the virtual hand raise. And if you are unable to see the Q&A feature on the Teams app, then you can access Teams through the web version. So you'll just have to leave. And then when you click on the link in the invite, just click continue on this browser. And we recommend using Google Chrome or Microsoft Edge as it works best. Okay, slide 4 gives us an overview of the agenda. So like Matthew said, we're approaching the end of the year. We want to recap the reporting and reconciliation timelines for this year's funding. We'll also touch on the accounting and note disclosure guidelines that set out some requirements and some guidance for your audited financial statements. And then we'll review what needs to be submitted for CWELCC and school age funding, and then with the remaining time, questions that you might have. So slide 5 is, you've seen this slide before, it's our reporting and reconciliation timeline. So you'll see in December, so in the next week or two, we will be releasing our reporting and reconciliation templates for CWELCC funding and 6 to 12. We will also be including guidelines and an instructional video to provide some direction and walk you through the process. Then in January, we'll hit our first deadlines. So service providers that are receiving school age funding will be required to submit their reconciliation documents. Top-up funding is also set for that deadline as well. And then once you submit your reconciliation templates, you will also be required to make your entries into GovGrants to report your total spending for each of your funding streams. And then in April, consistent with previous years, providers will be required to submit their audited financial statements and their FAIR, your financial annual information return. So the FAIR will also be used to reconcile your CWELCC. And your audited financial statement will continue to be consolidated at the head office level. Your FAIR, however, will be broken down at the site level. We also just received the ministry's standardized financial template. So we will be using the FAIR to complete that for you. And then you'll have to again, enter your results into GovGrants to report the total spending for your funding streams. So January and April of next year are your big deadlines that to just keep in mind. Once we have those details, our teams will begin the work of reviewing your reconciliation and looking at recoveries beginning in the second and third quarters of next year. For most service providers in the sector, this is what you should be able to expect in terms of your reporting and reconciliation requirements. Slide 7, again, or sorry, slide 6, again, this just gives you a little bit of an overview of your audited financial statements. So again, that's by head office, and then your FAIR, which will be broken down at the site level. So slide 7 is on our new accounting and note disclosure guidelines. So with the introduction of cost-based funding for CWELCC, there are new note disclosure requirements for your audited financial statements, and this is to align with the CWELCC rules. And we also provide some guidance around the accounting treatment of expenses and capital items. So the guidelines are intended for your accountants and auditors to prepare your financial statements so that we have alignment with CWELCC. So first and foremost, the guidelines include accounting treatments for your capital items. So that's if you're receiving funding through OTEF or your startup capital, for example. So there's some guidance on approaches for recording these. The guidelines also recommend when reporting your expenditures that you report your gross and not your net expenses. So that means you're putting in your expenses before subtracting any grants or offsets. And so this ensures that your CWELCC funding is accurately calculated because it is a cost-based model. And then the guidelines set out the requirements for your note disclosures. So this includes a summary of reconciliation. So that's where you will list your grants that you received, the amounts that you spent, and if any were payable to Peel. There's also note disclosures for accounting for repayment conditions of capital grants. So as folks know, when you if you're receiving OTEF funding for a major capital expense or startup capital, then there's a commitment to remain in CWELCC. So there's note disclosure there to track that as well. There's also note disclosure to detail your capital assets, breaking out your amortization expenses between those that are eligible under CWELCC and those that are not. And again, that is to support reconciliation of CWELCC. And then there's some notes on how to carry over your capital funding and disclose when you're reporting grant adjustments when there's funds repayable to Peel that are accrued. The last part of the guidelines also includes proration approaches. So for shared expenses, when you're serving 0 to 12, there's some guided direction on that you can choose to prorate your expenses, such as accommodations or staffing or admin between your 0 to 6 CWELCC eligible expenses and your 6 to 12. The accounting and note disclosure guidelines also contain plenty of examples for all the requirements that are set out, as well as the accounting treatments for capital grants. So it's a very helpful resource, and we are aiming to get the accounting guidelines, the reconciliation templates, and the FAIR next week. So we encourage you to please connect with your accountant and or your auditor early. Slide 8 just gives an example of one of the many in the accounting guidelines. So this is on the note disclosure for your capital assets to be broken down by those that are eligible for CWELCC and those that are not. So in this example, we have a provider. They replaced their roof in March of 2024, and then they added a room in September as part of their CWELCC expansion. So under CWELCC cost-based funding, amortization expenses are eligible if it's related to an asset that was purchased before August 15th, so before the announcement date for CWELCC. So the roof is an eligible expense, and sorry, also not paid for by public funds or reimbursed through insurance. And so that the way your capital assets are being reported is that we're recommending that you're reporting it based on whether it's eligible for CWELCC. So the roof replacement falls under your capital assets eligible for cost-based funding. and then capital assets that are not eligible for cost-based funding would be captured separately. So that's where you see the room addition there. So this example here is a bit of a simplified version. When you get the accounting guideline, you'll see that there's a bit more detail fleshed out in these examples, but we put in something that's a bit more simplified for the purposes of the deck. So that is it for the highlights in the accounting guideline and note disclosure requirement, and I will turn it over to Matthew.
Great. Thank you so much, Mary. So now we're going to shift our attention to some important information related to CWELCC reconciliation and the FAIR for 2025. So let's move to the next slide. Let me just start by saying, as we take a look at this slide containing information about the FAIR, I am very pleased to report that the team has been very hard at work to introduce some significant efficiencies related to 2025 CWELCC reporting. So first of all, starting this year, CWELCC reconciliation will no longer involve a separate reconciliation template. Providers will just need to fill out the FAIR template, which aligns with your audited financial statement, and that will comprise all of the information that's needed for 2025 reconciliation of CWELCC funding. So we have updated the FAIR template with some quality of life improvements, which are just detailed here on this slide. So first of all, the FAIR will support you by calculating your actual cost-based funding and allocation in lieu of profit and surplus to show you what values you will need to enter into the GovGrants system. It also has a helpful default proration that will be applied to shared expenses between 0 to 6 and 6 to 12 children, if you also serve 6 to 12. It includes helpful sections to report ineligible and non-base expenses, and it also automatically generates some of the note disclosures that Mary was talking about earlier in the previous slides. And those note disclosures can also be included in your audited financial statements. In addition to all of these things, we've given a lot of attention to administrative burden, and we've heard that feedback from the sector. And so we've worked closely with our colleagues in policy so that we could trim down the list of reporting requirements so that we are only selecting those relevant key performance indicators that are absolutely essential for financial modeling purposes or because the ministry has explicitly asked for that information. So these are some of the enhancements. We're really pleased with some of the work that the team has done. Thank you so much to members in the sector who have been very heavily involved in engagement and consultation. And in order to support you with filling out the FAIR and understanding all of these new enhancements, there will be a pre-recorded training video as well as a detailed instruction guide, which will be provided in the coming days along with the FAIR template. So please, when those are made available, please ensure that you make full use of those. Let's move on to the next slide. So hand in hand with the FAIR, let's talk about an early holiday present that we received about 2 weeks ago from the ministry. So 2 weeks ago, we received our 2026 CWELCC guidelines and the long anticipated standardized financial reporting template. So once again, I'd like to just take a moment to recognize some of the staff in Peel who were really just laser focused on supporting the sector this year, again, with that commitment to reduce administrative burden. And as soon as those documents were released from the ministry, they were hard at work in terms of incorporating the reporting requirements for center-based providers into the FAIR template. So once again, we have worked on adjusting all of the fields within the FAIR so that we are collecting some of the specific data inputs that the ministry has requested through the standardized financial template in the FAIR template. So you just need to fill that out along with your audited financial statement, and we will handle the roll-up of that data to EDU. So to support you in understanding what is new, I'd like to draw your attention to a couple of site-level reporting requirements that are outlined here on this slide. So by the time that we receive your FAIR and your audited financial statement, we should actually already have operational details as well as your breakdown of your financial information. So those have once again been incorporated so that we can seamlessly roll up that information on your behalf rather than asking you to report that information twice through a separate template. You will also notice the third sub-bullet on this slide. There is a new field of information. We're just directing your attention to it. It relates to the average paid vacation and sick days for program staff. Again, that is an explicit key performance indicator that the ministry has requested, and so we have added that to the FAIR. And the other thing that I would just mention is that in addition to all of these reporting requirements, so we've integrated them into the FAIR, the ministry has provided a strict deadline for Peel to submit rolled up data by June the 1st. And so I just make that deadline just very transparently known to all of the sector because it is of vital importance that you really adhere to the deadline for the audited financial statements and the FAIR to be submitted to Peel by April the 30th. That really enables us to have the time to take all of that wonderful kind of amalgamated information, roll it up for EDU, and it also just helps us in terms of avoiding situations where, you know, if reports are outstanding and we're receiving pressure from the province, you know, it avoids some of that back and forth as well. So just asking for the sector's support, please engage your auditors early. Share with them all of the lovely resources that we prepared related to the FAIR and the audited financial statements this year. And we're hoping that we can work together to just aim toward that April 30th deadline if possible. Thank you so much. So we'll just move on to slide 12 now. So after you've submitted your FAIR as well as your audited financial statement, you will actually easily be able to use the built-in calculator in the FAIR to determine if you owe a funding recovery based on the reported revenue and expenses. So there are two main instances under the cost-based funding model where you may owe a funding recovery. That is where your actual program costs are less than your program cost allocation. That essentially means that there's a surplus or underspending, which will then be recovered. The second situation applies to where your actual base fee revenue that was collected is higher than your expected base fee revenue offset. It should also be noted that your allocation in lieu of profit and surplus is adjusted based upon whatever your actual program costs are. So if your actual program costs are lower than your total allocation, your profit and surplus announcement is adjusted slightly downward because it's calculated upon what the actual program costs are. As in years past, when you have a situation where there is a repayable to Peel, that will be automatically deducted from future payments via GovGrants. So this is important to keep in mind because if you have any cash flow concerns in 2026 and you know, there could be a situation where there's a significant recovery, it's important to reach out to us, you know, proactively to notify us as soon as possible. Once again, through the FAIR template, you'll be able to accurately calculate what that amount owing will be. And we've done that intentionally just so that we can help to avoid any surprises in terms of adjustments and recoveries. So last but not least, just another reminder and a note to any of our service providers on the call who have multiple sites in Peel. Once again, in 2025 only, you do have funding flexibility to use underspending interchangeably between sites. So in 2026, once again, you'll receive your site level allocations and you will need to utilize only the allocation that applies to that site. But in 2025, there is that flexibility. So you will still need to report site level expenditure data in your FAIR, but when we are calculating your recoveries, they will be calculated using your consolidated revenue and expenses. Okay, so just a reminder about that piece for our multi-site providers. Moving on to slide 13, here is some important information about actual base fee revenue. So hopefully this year, you've been able to make use of our helpful operating budget template to track your actual base fee revenue as well as your actual expenses. As a reminder, the cost-based funding formula calculates the maximum amount of eligible costs that will be covered and that's known as your program cost allocation. So this program cost allocation is comprised of base fee revenue plus CWELCC funding. And for 2025, the funding formula calculates that expected base fee revenue, which is the estimated amount of base fee revenue collected when your center is at 90% operating capacity. As a reminder, that remaining 10%, which is known as the allowed vacancy rate, is actually covered by your remaining CWELCC funding. And so your CWELCC funding received ensures that your program is fully funded by filling that 10% gap through the allowed vacancy rate between your maximum eligible program costs and your base fee revenue. Now, during reconciliation, you will be asked to report your actual base fee revenue collected. If you collected more base fee revenue than expected, your CWELCC funding is correspondingly reduced, and this amount is considered as an overpayment and it's recovered. If you collected less base fee revenue than expected, then your expected base fee revenue offset remains in place. And the difference, as we've kind of noted in previous teleconference, will be taken as a loss. Now, on this second type of scenario, we realized that there might be some cases where service providers have experienced extenuating circumstances that could have contributed to reasons for lower actual base fee revenue collected. And if that applies to you, as well as what we've said before in our teleconference in August, I think the first thing that we would mention is as you're tracking your actual base fee revenue collected, please reach out proactively. If you're noticing that the actual amount is significantly less than the expected base fee revenue amount, you can reach out to your EYS and let us know early. In addition to this, though, in 2026, we're going to come back to the sector with some more details related to how we as Peel will assess and look to support service providers who find themselves within extenuating circumstances in 2025. So we're looking further into that, and as soon as we have some additional details, we'll be sure to communicate that out to the sector as well. So moving forward to slide 14. Just wanted to do a quick illustration for the situation where a service provider may have collected more actual base fee revenue than expected. So in this scenario, Child Care Center A has a total program cost allocation of $810,000, and that's comprised of $685,000 in cost-based funding and $125,000 in expected base fee revenue. And that, of course, assumes a 90% operating capacity. So through 2025, the program operated at near 100% capacity. And so what you can see here on this slide is that in that situation, their actual base fee revenue collected was $10,000 higher than what was expected. Now, bear in mind, once again, that 10% vacancy rate has already been covered through the $685,000 in CWELCC funding. Thus, in that scenario, anything that is collected above the expected base fee revenue of $125,000 is recovered at reconciliation. And so for this provider, they would report all of their actual expenses, they would report the actual base fee revenue that was collected, and then that would be factored into adjustments. And in this case, the adjustment would be a recovery of the $10,000. So moving forward to the next slide, we're moving into our final section of the teleconference. And we're just going to discuss two additional reporting requirements. So slide 16 talks once again about school age funding. So this is for anyone on the call who is in receipt of school age funding because you serve children ages 6 to 12. As shared in our last teleconference, the deadline for school age funding reconciliation is January 30th, 2026. So to support you with that reconciliation, Excel templates will be shared out before the end of the year. And I'm also pleased to inform you that all of the data that's being requested in the 6 to 12 reconciliation template, it will be rolled up and consolidated at a head office level. So that should hopefully make things a lot more streamlined for you as you're completing that reconciliation and providing some of your actual expenses. So that applies to both expenditure data as well as any key performance indicators related to 6 to 12 funding. Just an important note that we have at the bottom of this slide, that if you have any shared expenses, so for example, if in 2025 you had occupancy expenses such as repairs and maintenance or insurance that is prorated between 0 to 12 children, we just want to note that you will fill out that information in your 6 to 12 reconciliation, which is due in January. And you just want to ensure that that same method to split or prorate shared expenses when completed in your reconciliation is also reflected in your FAIR template, which will be collected in April. Moving forward to the next slide, this is actually just a quick sneak peek into 2026. And so last week, you would have actually already received a memo with a quick update related to our request for proposal procurement. So we're very pleased to announce again that we have 3 great organizations that will be contracted to work with us related to the ministry's new requirement for direct engagement to report on compliance. They will also be supporting us with our existing periodic funding reviews that are conducted from time to time. So these organizations are CDRCP, RSM Canada, and Deloitte. And just so that you have an idea, we'll come out to the sector with more details later in 2026 about what is in scope, all of the lovely details related to these direct engagement to report on compliance that the ministry has requested. The tentative date that we're looking to start those is actually June of 2026, because once again, we're going to await for those audited financial statements to be collected in April. And then we'll come out with some communication to the sector about what will be taking place and what's in scope for these direct engagements. So look forward to more details on that. And with that, we'll move on to slide 18, which is just a couple of important next steps. So following this teleconference, we will be sure to share out the materials that are listed here on this slide so that you could begin to work with your auditors in preparation for 2025 reconciliation. In addition to these materials, if you do have any questions, if you have any need for clarification, we are always open to that feedback, and we really do want to support you in terms of accurate and timely reporting. So please don't hesitate to reach out to your early years specialist. Another important update is that we plan to send a memo next week related to an update task in GovGrants. So we will be collecting some additional details related to things such as closures, operating hours, and PD days. Again, more details will be included within that memo, including timelines and some of the details for completing that update task. The timeline to complete that update task actually aligns in the new year, and so we're looking to receive that information back from the sector in early to mid-January, just so that we can have that information to inform some of our funding modeling and other details such as that as well. Okay, so with that, I think that concludes all of the topics that we had for today's teleconference on reporting and reconciliation. And so with the remaining time that we have, we're going to hand things over to Sonia, who's going to support us with moderating our question and answer period.